Good morning. Happy New Year. Hope everyone enjoyed their holiday season. Wanted to talk today a little bit about commodities and specifically gold. We had a really roller coaster ride of a year last year in the market. We started up really, really strong, and then we kind of crashed into the finish line. And this year, it seems like a lot of people are predicting more volatility, and there's a rising consensus that we're going to have some type of recessionary conditions in the near future. I tend to favor that kind of camp. But who knows how bad this is going to be? Is it going to be a real recession like 2008? Or is it going to be kind of more of a slowdown, So, the thing with 2008, what made it so bad largely was that no one saw it coming. Whereas now, like I said, there seems to be more of a consensus that we're heading in that direction. So who knows what will happen, but in either way, some exposure to gold is always a good idea for diversifying your portfolio and hedging your positions a little bit. Gold is it's often referred to as a safe haven asset. It's a great hedge against the inflation of the US dollar. And that is one of the main contributing factors to this, the likelihood of a recession is, the action by the Fed. And it's become increasingly unpredictable. Are they going to continue raising rates? Are they going to be more reactionary based on economic data, kind of a Janet Yellen type of approach? Or is he going to be just ho-hum hiking rates, periodically every quarter? So no one knows. They've been, this Jerry Powell has been really hard to read thus far, but when no one knows, obviously that creates uncertainty in the market. And when there's uncertainty in the market, a lot of people tend to run towards these safe haven assets, when the market becomes increasingly unpredictable. So gold is just that. Gold is, like I said, a great way to hedge against the US dollar, and it makes up an important piece of most diversified portfolios. So I want to just talk about a few different ways that you can invest in gold. Gold is obviously not a stock, it's a commodity itself, but you can get exposure to gold through stocks and ETFs and things like that. So you can buy actual gold contracts on a commodities exchange. You can buy physical gold. You can buy gold bullion, you can buy gold coins, gold bricks, whatever you want in that case. You can buy ETFs, as I mentioned, with a lot of different exposure to gold in their underlying assets. You have to, check what each ETF owns. GLD is one of the more famous ones. They're very good. Or you can also buy some stock in gold mining companies. So gold mining companies are almost a way of leveraging your exposure to gold, because a lot of times, if the price of gold goes up 2%, an efficient gold miner stock might go up 8%. So it's a way of getting a leveraged exposure to gold in that case as well. And just want to touch a little bit more. I mentioned about the purchasing of physical gold. So a lot of people think, well, I'm going to buy this collector coin that's made out of pure gold. Or, I'm going to buy this golden necklace that's 24 karat gold, and, I'm going to use that as my gold investment. You want to be very careful about that. Because for a lot of these things, these collector items and some of these fancy jewelry, you are paying a lot more than the underlying value of the gold, because you're paying for the design. You might be looking at a 60% markup just for the design. So if you want to invest in physical gold, I would certainly look at gold bullion. If you're just going to keep it in a safe or something like that, or you just want some exposure directly to gold, bullion really has no markup. It might be marked up 1%, something like that, but you shouldn't be looking for any markups, any significant markups, that is. You should be looking to pay right around the spot price of gold. So if you do want to buy jewelry and you want to wear your investment, there is a great website. I'm going to link it below. It's called Mene. they make jewelry with investment grade gold. I'm not affiliated with them in any way. I don't make any money from them, but I know they're a great company for those that are into jewelry. I'm obviously not, you can see, but it's a great way to increase the resale value. If you're going to buy jewelry anyway, you might as well make it an investment. This is pure gold that they use, no markup. I mean, there might be a few percent markup for the design, but for the most part, if you buy the necklace or the watch or whatever they sell, and then you hang on to it and the price of gold goes up, you can sell it for more money in the future. You can sell it for the spot price of gold as if they were going to melt it down. So just a few things to think about for the new year, as we always strive to diversify our portfolios and grow our assets over time. So hope everyone has a great start to 2019. Take care.